Hey everyone, and welcome. So, you've probably heard about trading, seen the crazy charts, and maybe thought, that's way too complicated for me. Well, today we're going to change that. We're breaking down the absolute fundamentals that separate the top 1% of traders from, well, everyone else.
But before we get into any of the fun stuff, the charts, the strategies, we need to have a little reality check. There's a number you have to understand before you ever think about placing a trade. And honestly, it's a bit of a tough pill to swallow.
Yeah, you're seeing that right. An estimated 99% of people who try trading end up losing money. That number is staggering, and it's not meant to scare you off. It's meant to be a wake-up call. It shows you there's a massive difference between how most people think trading works and how the pros actually do it. So that leads to the big question, doesn't it? What's the secret sauce? What is that elusive 1% doing that the other 99% are missing? Well, stick around because that's exactly what we're going to unpack. Okay, so first things first, to understand the 1%, you have to understand the biggest mistake the 99% make. So many people jump into the market thinking it's some kind of get-rich-quick button. They see a stock go to the moon and think, hey, I can do that. But that's not trading. That's gambling. And that's the core idea here. Trading is not a lottery ticket. It is a skill. It's a craft you have to learn, practice, and respect. It's about strategy. It's about patience. And it's about discipline. You're building something that can pay off for the rest of your life, not just for one lucky afternoon. So if it's a craft, where do we start? Well, like with any new skill, you have to learn the basics. And in trading, the most basic, fundamental thing is learning to read the language of the market itself. You have to learn the language of price. At the very heart of every single chart you'll ever see are these little things right here. Candlesticks. I know, they can look a little weird at first, but each one tells a simple story. It shows you where the price started, the highest it went, the lowest it went, and where it closed for that specific time period. So when you look at these candlesticks, what do you see? If you're like most beginners, you just see colors. Green is good, price went up. Red is bad, price went down. Simple, right? Well, that's the beginner's view. The pros, they see something totally different. They see a constant tug of war, what they call an imbalance of power between buyers and sellers. See, the real story isn't just in the color of the candle. It's in those thin little lines that stick out from the top and bottom. We call those wicks. And those wicks are like footprints in the sand. A long wick on top tells you that buyers they really tried to push the price up high, but the sellers were stronger and they smacked it right back down. The wicks tell you who's really in control. Okay, so once you can read a single candlestick, you can start to put them together. And when you do that, you start to notice something really, really interesting. You'll see that the price seems to hit these invisible walls, bouncing off the same levels over and over again. These invisible walls have a name. Traders call them support and resistance. And the easiest way to think about it is like a bouncing ball in a room. Support is the floor that the price bounces up from. Resistance is the ceiling that the price bounces down from. Finding these floors and ceilings is where the magic starts to happen. But wait a minute. Why? Why do these walls even exist? Is it just some random coincidence that the price keeps turning around at the same spot? Well, the answer is no, and understanding why is one of the most important secrets of the market. It's not magic, it's just big money. Think about it. A giant bank wants to buy a huge amount of stock. They can't just hit buy all at once, right? That would send the price skyrocketing. So they place a massive order at a certain price level, but only a small piece of it gets filled before the price moves away. The rest of their giant order is just sitting there, waiting. That pile of unfilled orders creates the invisible wall. It's a magnet for price. So now you're getting it. You can read the candles, you can see the invisible walls. You're starting to understand the battlefield. But to win the war, you have to see the entire map. And this is where so many new traders get lost. The source material has this perfect analogy for it. If you're only looking at a 5-minute chart, it's like you're standing in a forest staring at a single tree. You might know everything about that one tree, but you have no idea which way the rest of the forest is leaning, or if it's on fire. So what do? You have to zoom out. You've got to see the big picture. And that's where multiple time frame analysis comes in. You look at the market on a daily chart to see the whole forest, then maybe a 4-hour chart to see a section of it, and then you use the 15-minute chart to pick your individual tree. You always want to be trading with the direction of the forest, not against it. Okay, quick recap. You now have 3 powerful tools in your toolkit. You know how to read the imbalance of power in candlesticks, you know how to spot the invisible walls of support and resistance, and you know how to use multiple timeframes to see the big picture trend. So, with all of this, is this it? Is this the big secret? Is this all you need to finally join that top 1%? No. This is. You see, everything we've talked about so far is about playing offense. It's about finding good trades and trying to predict where the market will go next. But the single most important job of a trader, the one thing that truly separates the pros from the amateurs, is playing defense. The name of the game is risk management. It is not about being right all the time. In fact, most professional traders are wrong a lot. The real secret is that when they win big, and when they lose small. They control their losses so that just a few winning trades can wipe out all their small losses and then some. And your absolute best friend, your most important defensive tool, is the stop loss. This is simply an order that automatically gets you out of a trade if the price moves against you by a certain amount. It's your safety net. It's your eject button. Without a stop loss, you're not trading, my friend. You're just hoping. And hope is not a strategy. So there it is. You've seen the map, you know the language, you can see the walls, and most importantly, you know the absolute necessity of playing defense. The real question is, are you prepared to put in the time and the discipline to master the craft? The journey to the 1% starts now.